Hello, traders. Gary Wagner with the Gold Forecast here. It is approximately 10 a.m. in Honolulu, Hawaii, the 25th day of January, Tuesday, and this is the Daily Report. Gold is currently trading under pressure, spot market trading roughly at 1330, 1331, down between $4 and $5 lower this morning. In terms of the breakdown itself, we have a change due to the weakening U.S. dollar. That's giving it a push of up 50 cents, and predominant selling in the market is putting it off about $4.60, giving it a net change of negative 410. Traders, we are looking at our daily COMEX gold. This is the April contract. And I have not only Elliott wave, but Fibonacci retracement. And as you can see, we are currently trading right above this 38% level here, which we can see right in here. And that is the 1367. We broke through that. Of course, right in here, our 38% level is at 1328. And as you can see, we are currently trading above it. But I do see a very interesting potential candlestick pattern forming, and I wanted to spend a moment talking to you about it. It's a very rare pattern. You very rarely see it. If we actually complete this pattern, I will be surprised, but it is simply known as a tri-star bottom. There are two patterns. One is called a tri-star top, and one is called a tri-star bottom, and let me try to draw that in for us, traders. As you can see, as this market came down in our retracement down in this area, we had this doji yesterday. And today currently, now, through the trading day, it was almost hammer-like, but currently it again is a doji-like candle. And a third candle, if it would form tomorrow, something like that, this is what is called a tri-star bottom. It is simply three dojis with the bottom doji right in here being nestled between these two other ones. It can be a very, very strong indicator of a potential bottom. So it is truly something that we do want to pay note to. So, are we setting ourselves up for some potential support and a potential bottom in this area? Well, I would have to say that technically the indication is fairly strong. We do have good support in this area. There's absolutely no doubt about it. You can see these bands where we have typically found support prior to that, and I do believe that we might see a tentative bottom form in this. Again, it's a little bit too early to tell, but technically we have some good information right in this area. But I also do want us to pay particular credence to the fact that as this market has gone up, and realize, traders, I am absolutely fundamentally bullish on gold. I think that what we are witnessing here is a healthy, well-needed correction. Markets do not move straight up. They do not move straight down. Interesting, news tends to change as the dynamics of the market change. But when we take a look at this market in terms of the big picture, you can see that this market has pretty much been runaway and had been moving in a almost straight vertical pattern all the way for the last couple of years, so that any kind of a retracement in this area could be fairly sizable. So that when we take a look to see where we think this market could actually inevitably end up, what I want to do is do a basic comparison and look at the types of various retracements that we have seen before. And what I've done is I've simply created some what's called auto scale lines. And on an auto scale line, What we're doing is simply looking at where this market has gone and how the retracements have weathered in the past. And as you can see, that first line that I've put up, this line here is our retracement, and it is a simple retracement from this area from here to here. And now what I wanted to look at is this much larger retracement, which of course is this line here. And when we take a look at that, you can see, and these are auto scales, that we are nowhere near the type of retracement that we witnessed here. However, at the same time, we do have a very, very similar pattern in terms of our last retracement if we take a look at where the market had been before. Let me kind of line that up a little bit better for us. You can see that that also matches fairly well. So that if we have a retracement similar to this last retracement that we witnessed right in here, we might in fact be completely done with our retracement. However, if this retracement is more like the one that was witnessed here, which is that big retracement that we saw back in 2009 through February, then we still have a little further to go. We'll have to wait and see how the market plays out, but I do believe that the market is currently setting ourselves up for an interesting bottom. It might be a short-term bounce, it might be the absolute end of the correction, and that we'll have to see as more technical data becomes available to us. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for another daily report. Bye-bye.